been speaking with us. Shankar, heard you mention earlier that you expect to see some kind of big move around the budget. Do you think a correction might be precipitated by that event, and how bad could it get?
My view has been that we are, probabilistically speaking, headed more towards the 12,000 mark rather than towards the 21,000 mark. I think the 21 will need to wait. And if you see just almost on the stealth, almost 2 years have passed since we saw the highs last time, and I dare say, a little bit more water needs to flow before we make a retest of those levels. So I think before that you will probably see levels which are a whole lot lower. And the fatigue on the market came by way of the September quarter numbers, which were tepid to say the least. And I don't think things have improved that much in the current quarter, which is underway, for us to start believing that the numbers this quarter are going to be a lot better sequentially, than what happened in the September quarter. And again, we had, in a manner of speaking, 2009, the middle of 2009 was really quite a sweet spot if you think in hindsight and try and rationalize it, that you had a very high base effect of inflation. So you got low inflation in the middle of 2009. You had a very, very low base effect of corporate numbers because the second half of 2008 was terrible. So almost anything compared to that would have looked good. Now we are looking at the other side of the hill, which is really that, we've seen the good numbers come through, but core economic growth, core numbers, core growth, on infrastructure, I don't think those things have improved that much for the better. And those numbers will again start to crimp your earnings estimates, going forward. So I just think that you're going to see levels, 20-25% lower sooner than 20-25% higher.
You've been fairly confident and bullish on consumer themes, Shankar, through 2009, autos, even FMCG in part, and a large part of those earnings and that traction has come in because of government spending and the stimulus packages, etc. If those get withdrawn, would you still maintain your sanguine view through 2010 on some of those consumer sectors, or do you think their earnings may not grow as much as they did in 2009 because of some factors being absent?
First of all, the Indian stimulus package was really a joke because, I think we called it a stimulus package for lack of a better term, but, it was a little bit of a cut here or there, but it was nothing compared to what the Chinese government put on, or even what Thailand put on, which was, I think, some $3 or $4 billion. So, fine, it's a nice term to use, so we're using it. But, and I dare say they might want to tinker around a little bit, tighten it a bit in the forthcoming budget. I don't think it will matter much because I don't think the recovery or the so-called recovery, at least in the auto sector, had much to do with whatever stimulus package the government released. I think it was simply that most of India wasn't that affected by this economic crisis that happened in the West. It was largely a metro phenomenon, but I think this, sort of the semi-urban or the rural areas in India were not that badly affected. And I know people across the country, their lives, were just fine. It's just that we people sitting in this 2 square mile of Fort and Nariman Point, who were drinking well into the sort of sunset out of depression. But those guys were really not hurting much. So cement sales were pretty robust because people were still building homes. Car sales or bike sales were pretty okay because they still had income. Agri incomes were pretty strong. So, the wheels of the economy had not actually jammed. And I don't think the reason for these numbers were really, you can't attribute most of it to the government stimulus. So even if it is withdrawn, I don't think numbers will fall off a cliff. But that said, I just think the scorching pace itself has been very, very surprising. Like we've said many times on the show, that's a sector we've liked in terms of the auto pack. But, incrementally you do still kind of struggle to believe that, we will see 2010 being as strong as 2009. But in context of what else is available to buy, I still go with these kind of companies because they are truly quality companies. Valuations are not off the charts. They're still actually lower than a lot of the infra company valuations. They will not dilute you, which to my mind is the single biggest factor for liking them apart from their growth numbers. They won't have a QIP every 25 days. So I think that's still an okay spot. But given my view that markets will sell off, I think they will also hurt a bit. But overall, that's still the space I would prefer to be in.
Always that the market is more probably heading towards 12,000, Shankar. Where does that leave the entire mid-cap space?
I don't have a clear view on the mid-cap because mid-caps are typically not easy to categorize. They are all kinds of, companies within the mid-cap space, of all shapes and sizes, dodgy managements, good managements, everything. So it's hard to make a general case. I just think that if markets do sell off, they will in general, obviously being the high beta end of the market, hurt a lot more. But like I said, I don't want to stick my neck out and say that they will be absolutely decimated, because there are some good companies in there which don't require a strong stock market for their daily sustenance.
You said 2010 could be rougher for the bulls, Shankar. Could it be that the market gives you a sharp compression, gets close to the levels that you're talking about, but rebounds equally closely and equally soon, and you finally can make gains on the long side as well? The fall could be just a buying opportunity, or you don't think it will be as easy to catch?
It won't be very difficult to catch. The only issue is that, when I entered 2009, at least my thinking was that it was going to be a very, very tricky year and a lot trickier to call than 2008 was, and which is something I've said many times, that making the call in 2008 was a no-brainer, but 2009 was going to be tougher, and it did pretty much turn out that way, that you saw bad first 3 months and terrific next 3 or 4 months. But after that, markets have been almost as if they've been going through molasses. They have been really, really sluggish. They've been fighting hard to conquer the next peak. I think 2010 may well be more of the same, in which we probably dampen down the volatility a little bit than what we've seen in 2008 and 2009, simply to compensate for the excessive levels of volatility we've seen in the last 2.5 years. We've seen our volatility that typically take 3 or 4 years to play out in a matter of a few months' time. I mean, how many times can you go back in history and see markets doubling in a matter of 4 months' time? Or for that matter, halving in a matter of 6 months' time. So I just think 2010 may not be as entertaining either for the bulls or the bears as 2008 or 2009 has been.
The dark horse in terms of sectors, Shankar, has been the pharmaceutical space, including the mid-caps, where there have been a couple of interesting deals. How would you approach that sector going into 2010?
Now, that's a sector we have liked, particularly the fallen angel in that sector, and we typically like those kind of plays. We don't like necessarily the blue chip in the sector, because that's pretty priced in, everybody's in consensus. So we like Ranbaxy in the low 200 levels, and that was our big call in the sector. We thought it had, the pendulum had swung far too much against the company, and a lot of the problems were in the price, and we've been heartened by the stock's performance. So that's the one space, that's overall the one space we have liked. We've liked Ranbaxy within that space. Overall, I have reason to believe, Orchid again is something that we've been very bullish on. We've thumped the table, around, I think, 120, 115 or so. Again, it's been a standout performer. I think that sector will still do okay in an environment wherein the markets, high beta darlings like the infra, the realty pack will struggle, which I think they will struggle. They're already struggling. You can see a lot of the names have been just there, flattish for the last 6 months after the big run-up of, in the March to June period. So given the fact that the high beta end of the market is not going anywhere up soon anyway, and probably headed lower, the pendulum will shift to these kind of sectors, and I think pharma is a pretty good place to park your money in 2010. And I think globally also that trade will play itself out. So you can see globally defenses will come into their own in the next 6 months' time.
Thanks, Shankar, for joining in as always. You have a good 2010. Appreciate your views as always.